Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic which is profit versus income. We are going to understand this topic in a detailed format. See, at the very beginning end, you need to understand, there is a very slight difference, very minor difference between what we call as profit and what is known as your income. It's a very thin line of difference because of which have this topic has been taken. There are two important terms that that are very useful in determining the financial strength of the company. So the term profit and income, they are often used as synonyms, especially the net profit and the net income. So which are they're quite similar but are different from the point of view of the accounting. If you see, for the first, profit on a very simple terms is a thing which we called as the surplus amount that is left after deducting all the expenses from the revenue. Second, income in a very simple terms is the actual amount of the money that has been earned, you can say, by the company. So even if both the income and the profit deal with the what we call as the positive cash flow, they deal with what? They deal with the positive flow of cash. Income versus profit are basically, they are the two concepts which differ in few scenarios. In general, if you see, profit is the reward for the risk that has been taken by the business, by the company, and profit is the net amount of the money that is left after deducting all the related cost, expenses, taxes from the revenues. Revenue means your sales. So profit works as a tool in calculating or for the calculation of the tax of the enterprise, and we can describe profit as the difference between the selling price and the cost price of the product or services. Now, profit is in company accounting, it can be divided into two parts. The first is what we call as the gross profit, and the second one is what we call as the net profit, right? Gross profit is the, we can say, revenue minus the COGS. That's the cost of goods sold. And also, you need to note that income is also divided into two parts. I'm talking about over here income. Income is divided into two parts. The first one is called the earned income, and the second one is called the unearned income. So if we talk about the unearned income, it is the income from the sales of goods and services. So unearned income is like the what we call as the passive income that is made through investments made in any other place. Now let's understand the difference between profit versus income with the help of infographics so that we have really a great idea regarding the topic. There are four differences that you need to understand between profit and income. If we start with the profit, the difference between it is this particular term profit is the difference between the amount that has been earned and the amount that has been spent. So this is your revenue, this is your cost in buying, that is your cost of goods sold, operating, producing something. Operating and producing includes all your S&D expenditures or administrative expenditure and other operating expenditures. On the other hand, if you see for income, it is the actual amount of the money that has been earned. It's like the hard or the hard bound money that has been earned. Now, the second point of difference is the categorization. If you see for the profit, profit is divided, we just know that it is divided into two parts, gross profit and net profit. So the chart of profit is gross, where gross profit is has to be bigger than the net profit. Quite conceptual. I mean, that's quite common sense, sorry. And income is basically earned income and the earned income. So these are the two categorization. Now, what is the dependency on profit and income? I mean, who is dependent on whom? Profit is very much dependent on revenue. That is a sales. If you don't have proper sales, you won't be having profit. And it can also be said that if revenue is there, but there can be chances that because of the high cost, you don't receive profit. Instead, you receive losses. So that is also one part possible. If we talk about income, income is dependent on both revenue and the profit. That is the sales and the profit part. What is the indicators or the drivers? I mean, what exactly it shows or discloses? Profit discloses how much a firm has actually earned over the total cost of sales. So it is basically like, you can say, you have your revenue. So revenue is your cost of what we call as the number of goods that have been sold into the price per unit, and you deduct all sort of expenditures the operating expenditures and COGS, all the expenditures that you deduct. So the final amount that you receive is your profit. So it indicates how much a firm is earned over the total cost of sales. And income, it basically indicates what amount would be distributed among the shareholders. What is the amount that will be distributed among the shareholders, or we can say reinvested into the business. So like after deducting expenses, it includes like interest. You have a sort of what we call as taxes. We deduct uh, dividend that has been paid to preference shareholders. So after that, whatever amount that remains, which is your net income or what we call as your income, is what is all about. That is a part that can be distributed to the shareholders, or the amount can be reinvested. Let's take an example here. Let's say the revenue is let's say 10,000 goods were sold, and the 1,000 goods were sold, and the price was $10 each. There was some operating expenditure closely to 2,000. COGS was 5,000. Interest, let's $500. So once we total, if we sum it up, we'll have taxes. Let's say you have taxes of 600. Dividend that you pay to the preference shareholder is 700. So the final income that remains is what is your net income, what we call as the income. $1,200 is gonna be your income. So this is how you figure out the amount. Now, when we go on to discussing the other criterias, we will be able to determine with the help of an example. Let's take one. Like for example, let's say there's Mr. B has purchased, let's say, some goods worth of 1,000, and he has paid on account of that $40. He has paid amount for carriage, let's say $20 as octroi duty, and he has sold goods for, let's say, $1,400. So the gross profit over here is going to be how much? So our gross profit is going to be our total sales less the COGS, that is the cost of goods sold. So our total sales over here is equal to 1,400, right? Then you have the COGS, that's the cost of goods sold, which is quite reasonable. We can calculate 1,000 plus 40 plus 20. So that's going to be 1,060. You can just add it up, sum it up, all three numbers. 40 plus 20 gives you your 1,060, right? And the total sales minus the cost of goods sold, that's going to be what we call as the gross profit. So net profit is the basically the gross profit. It's going to be your gross profit less any indirect expenditures, right? Like, so suppose in the same example, let's say Mr. B paid $100 as, let's say, salary, $50 as, let's say, rent. So his net profit is going to be 340 less 100, let's 50, that's going to be 190, right? So that's going to be your net profit. So income of the company, it can also be termed as the net earnings, and when we deduct the preference dividend from the net profit, we get the what we call as the net earnings, right? So it is the residual amount left with the company, which can either be held by the company as what we call as the retained earnings, or they can distribute the amount to the equity shareholders as dividend. And it can also be said that it is the net increase in the equity shareholders fund, that is called ESF. So if the dividend is distributed, let's say, for $10, so the net income would be 190. I'll just pick up the number from the previous sheet, that is 190 less, we'll go over here, we'll deduct 10 here, so it will be 180. So, after discussing all of this, let me give my final thoughts on this particular topic. There is a very, you can say, slight difference between the profit versus income. The actual difference is in the what we call as the directions. The profit indicates how much money it exceeds beyond the total cost of the company during the particular time frame, and the income, on the other hand, indicates how much money the company can keep for what we call as a reinvestment, and how much dividend they would pay to the equity shareholders. So an individual who has started out in the business and the profit and income are the same thing, but it always helps if one understands the technical difference between the profit and the income, and what income and profit indicates. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.